Good evening, everyone. Welcome to our July IQI Canada evening talks. My name is Yusuf Iqbal. I'm the country head of July IQI. It's a beautiful day out there. The weather is getting better. And today, my guest is Anthony Mendes, who comes on a monthly update and give us some information about the insurance. Welcome, Anthony. How are you doing?
Thank you, Yusuf. Thank you very much. I'm doing very well. Thanks once again to bringing me on the show. Just love your programs. They're very informative, not only on insurance, but the various topics you're holding on, the various people that you're bringing. Some of them are really great experts. They explain things very well, and I think so. It's giving a big name, a good platform to IQI Canada. So
Thank you
congratulations.
very much. Thank you, Anthony. Thank you so much. And I really appreciate what you said. We've been getting a lot of response from the viewers as well. And now we have started up a session in Mandarin and Cantonese. So every Friday we have a session in Mandarin. Every Sunday we have a session in Cantonese. Plus, and we also have a session in Hindi and Urdu as well. So
Wonderful.
Anthony, last time when we
Yusuf,
were here last month, yeah.
Yusuf, just to add to that, I speak nearly 5 languages. I
Really?
speak
What are the languages?
I speak English, I speak Urdu, Punjabi. There's one Konkani that's within the Goan community.
Yeah,
So four, and then of course I speak another language that's French, but not too much. That's
that's
so.
that's amazing. Now I know that I can probably do a show with you in Urdu and Punjabi. Not sure about the Go language. I can do that or not, but we should try that as well.
Très bien, comment ça va? So we can.
Awesome, awesome, awesome. So, Anthony, last month when you were here, and one thing I want the viewers to know that it's going to be every last Thursday of every month. We will have a session on insurance with Anthony Mendes, who is a broker and very experienced person. Uh, Last time we talked about, Anthony, was the home insurance. We talk about the investors insurance. We talk about the student housing insurance.
Right.
Today, we thought we'll talk about the creditors insurance. Can you tell me what exactly is the creditors insurance?
Yes. So uh, it's a very important subject. It's a very vast subject as well. Credit insurance, debt insurance. So creditors insurance, usually the banks, when they give you a loan, they ask for insurance on yours. Usually they ask for life insurance. And just now I did a policy. So the banker called me and he says, I want the disability insurance. I'm giving a $500,000 loan to this entity. I'm looking at the life insurance and disability insurance. So the bank is trying to protect themselves. So whenever an institution wants to protect itself from anything happening to an individual, uh, in case of death, in case of any disability, heart attack, stroke, cancers, they want to see that their funds, their interest is protected. So that is called creditor insurance.
Is credit insurance different than a mortgage insurance?
Yes, and
Okay.
100% yes. I mean, so why is it different? Is because creditor insurance has a wide range. It can come for commercial insurances. Suppose you're taking a line of credit. Suppose you're taking a loan against some uh, assets. So that would not be mortgage insurance, but mortgage insurance would be exactly towards your primary residence. So God forbid if your primary residence they have given a loan to you. God forbid something happens to you or to your spouse, that mortgage is paid off. The bank would
Okay.
get its money, and the house is now yours.
So the beneficiary is it's on the mortgage insurance is the bank or the mortgager basically. And what about in credit insurance? You could have a
So
spouse as well as a beneficiary.
So on the creditors insurance, right? It's always the bank is the beneficiary, always,
Okay. All right.
right? Uh, and it will only go towards the person who they have taken the loan against. On the mortgage side, if the big question is if the husband and the wife, both spouses are entitled on the property and one passes away, then the mortgage insurance will come into play. And in the
Okay.
mortgage insurance, they will protect the bank first. The bank will get the money, whatever is the person owes to the bank, and then they might give some money to the beneficiaries.
Okay.
So if you have your own private insurance, then your family is protected, not the bank. So suppose you take a loan of $1 million from the bank,
Yeah. Yeah.
and God forbid something happens to your spouse, they pass away. That $1 million is given to your spouse, to the beneficiary,
Okay.
and they don't care about the bank. So once your spouse or the beneficiary gets the $1 million, they can understand whether to pay off the loan or keep it the same way, invest the $1 million, you know, those kind of
Got
things.
it. Got it. Got it. Now, one thing I've noticed that like most of the time when you're getting a mortgage, there is a mortgage insurance which is being normally advised by the banks at that point in time. But if you have your own creditor insurance, you could actually deny that mortgage insurance you have, but you still have to provide a proof of your creditor insurance, or how does it work?
So when you go to a bank for a mortgage, it's mandatory for the banker to ask you whether you need this insurance. You can deny it or you can accept
Okay.
it. So if you deny it,
Okay.
it would be a good thing if you have your own life insurance policies in place. If you have your own life insurance where where the spouse is also covered, that's good enough. They would
Okay.
accept that. Yeah.
Okay. Now, the question is that is it not good to get insurance from the bank? Like, who's giving you the insurance? Is it or okay? Before that, do bank also offer you credit insurance, or normally they offer you mortgage insurance?
No, so the banks offer you mortgage insurance and they do offer through third party, they do offer creditor insurance. So let's be clear over here.
Yeah.
We're talking about the business that's related to your uh, real estate. So
That's right.
what happens is we will be talking more on the mortgage insurance. So creditor insurance would be a company taking $3 million or $5 million or whatever X amount regarding their business. They would need for their business, they would need creditor protection, creditor
Got it.
insurance, right?
Okay.
But when we talk about mortgage insurance, because it's your primary home, so it's going to benefit your family. Uh, so then we talk about the mortgage insurance. Yeah.
And what are the policies involved in giving up a credit insurance?
Now, Yusuf, you know it very well. You have all those policies as well. Uh, we have discussed this many times. I know that you have a mortgage, right? Like any other Canadian,
Yeah.
90% Canadians have a mortgage. But it's sad that 90% Canadians don't have insurances in place. So,
Hmm.
like you have the critical illness plan that, God forbid, if anything happens to you, heart attack, stroke, cancer. So at least you have taken that insurance and you've taken, I know what you have done is, suppose your payment was whatever your X amount payment, multiply by, say, 1 year, that is the minimum that we had discussed. That
Yeah.
fell into your budget as well. And that's the critical illness for that amount. So the critical illness is they give you an amount upfront. God forbid if
Okay.
you were hit by heart attack, stroke, cancer, and suppose you're paying 2,000, let's say you're paying $5,000 every month towards your mortgage. So then you will take in critical illness, say at least for 1 year, 60,000 minimum. That if I get a heart attack or a stroke or a cancer or something, at least I can pay my yearly, my mortgage. I can pay my mortgage, my dues on a monthly basis from that 60,000 that I would get. That is one way of protecting it. So they
Okay.
will give you a lump sum money. Then life insurance, of course, you've got the life insurance. Then you've got the disability, that if at work or otherwise, if you get hurt whilst working, uh, you can't go to work anymore, especially for self-employed people. It's very important. And in that sector, then you want to be covered. So you can't go to work, then your mortgage, your commitments are dealt with and they're paid off. So by the
And
insurance.
that's a very important point you have raised here. By the way, good morning from Malaysia. Thank you, Beth, for joining us.
I bet.
So, yes, you made a very important point that most of the time, we don't protect ourselves. God forbid, unknowingly something happens. There should be insurance and coverages that should be in place. And I know that as an advisor, you always look into looking at what is the affordability factor and what is the best protection based on the individual circumstances of an individual, because everything for every individual would be different. Something which works for me may not work for somebody else on that. I guess that's where the insurance brokers come into place, right?
Yes, if the insurance broker is good enough, he can, direct you in a certain direction. Now, I'll just ask you a question that people talk about affordability, and I ask them the question, uh, average, what type of car do you drive? And they'll say a $40,000 car. Now, I say for a $40,000 car, how much of in Ontario, what is the premium that you pay? So it's between $3,500 to $4,000, right? Depends
Right.
on drivers and this all that stuff. So average, you're paying $3,500 per household. What's the family income in Ontario? So that's around 55, 60,000 dollars annually. So that is a good chunk of your income, 6% that you pay towards a 40,000 to protect a $40,000 car plus $1 million of liability. But what are you doing to protect your family? God forbid something would happen drastically. So people start thinking, and they can't decide. Even a $40 policy is very expensive, they find. So if you keep a ballpark figure that I'm going to pay, that's my budget, 3%, 4% annually. If I'm taking a loan, if I am getting into a situation where there's a loan outstanding, I don't want my family to ever suffer, especially in case of a mortgage, right? Uh, and
Yeah,
especially for a home. So,
that's true. Great. So we got joined by Kashev. Hi, Kashev. Hope you're doing well.
how are you?
We've been joined by Jeanette. Hey, Jeanette. Hope you're doing well as well. So coming back to the question, I tell me is that, like, if I want to protect, because if there's a lot of investors who has put in their who's bought their properties, uh, how can we protect our investors against a disability or a critical insurance?
It's simple, Yusuf. I mean, uh, if the investor has, I mean, if he's young, it will be a lot cheaper for him. So he can get a life insurance, he can get critical illness, which would cover him against heart attack, stroke, and cancers. So he would be protecting that, and he can always, the insurance that he has on a disability. If he's an investor, he can always build in that expense into his income and say, uh, X amount. That's my cost to keep these properties, and that's what I need to, that's how I built up my revenue stream. Uh, Income wise. I mean, suppose if he's going to take a rent of say $1,800, he'll know I should take $1,900 because $100 would go towards my
And
premiums,
taking
or 1850, whatever works for him.
oh, okay, great, great. I think I just got a little lost in there, Anthony.
Yeah, I think so. You're also coming in and out. I don't know whether it's my internet. So where did you lose me, Yusuf? Yusuf, where did you lose me? I lost you completely.
Yeah, I don't know what happened now. Anthony, can you hear me?
Yeah, I can hear you now. Yeah.
Okay, all right. It's probably my internet. Kashif is saying it's probably my internet. Sorry about that. And also talking about these self-employed individuals. Why is it necessary, Anthony, for self-employed people to have this insurance?
Yusuf, self-employed in sense of your realtors, your brokers. For them, it's a very important thing. But talking from the point of view of your investors, uh, I think so. Investors, they should have their own insurances, life insurance, the disability insurance, or critical illness, just to cover their commitments, financial commitments that they owe. But for
Okay,
if you're talking about your brokers, that's entirely a different subject. We can, I think so. Brokers do understand. The only thing is brokers need to make these things aware to their investors, because we have a service to our investors, to our the people that we serve, right?
that's right.
And so that is what we can bring to the table. We can bring them how to protect your asset. So I
That's
think so
right.
we can be talking more on that figure. Now, if your investor is self-employed, then 100%. When your broker, any of your IQI's broker, is speaking on that subject, they should gauge uh, where the person is. He's self-employed. He does not have disability. How would he complete his commitments? God forbid something happens to him. You don't want him to, God forbid something happens, and then the family is stranded. So those kind of things, your brokers need to know. So they
Well,
would have that discussion with the client.
that's a very important thing which you have raised right now, because a lot of time people don't talk about it at that point in time. That how would they cover themselves in case of any sort of emergencies on that. So we actually have a question from Jeanette, if you can read that as well. In the event of multiple investment properties as well as primary house, what is the type of policy coverage is recommended, and does coverage to the total outstanding mortgage?
Uh, Junaid, that's a very, very smart question. So in that situation, when there is an investor who has got multiple properties, so suppose he's got $1 million outstanding, right? So he pays maybe for $1 million, it would be something like uh, say uh, $4,000, between 4,500. So he knows that his commitment is $4,500 every month, correct? Now, if he can take a disability policy, which would cover all his properties, all his total 1 million, we have said he has to disburse 4,500, $1,000 for one property, 1,500 for another. Total is $4,500. He can take a disability insurance. That would be called a debtor's insurance, only for $4,500. He can
Okay.
cover that. So in case of a disability, the insurance company will pay to his debtor, to the financial institutions, $4,500. He just have to give us a
Hmm.
proof that he's paying $4,500 towards his mortgages or his commitments, financial commitments, and he will be covered for that.
Okay, excellent. While we have Anthony here, we will continue with our chat. If it's anybody has any other questions, thank you, Junaid, for the good question. If you have any other questions, please feel free to ask us. Now, how is the spouse covered if the spouse is not on the title? How does the credit insurance plays a role in that?
Very good question. If a spouse is not on the title, creditor insurance does not cover her.
Oh, okay,
Very simple. Yeah. So suppose Mr. A, he takes he's on the title,
okay,
and Mrs. B is not on the title, but she's a spouse. So in case of Mr. A, suppose in case of Mrs. B passes away, Mr. A would get nothing out of it. He would be still paying out his mortgage and whatever, right? So that is
So,
one.
what is recommended? Do you recommend another type of insurance for that, or what do you recommend
So
as a broker
it's
in that
it's
scenario?
important for Mr. A and for Mr. and for Mrs. B to have their own insurances equivalent to the mortgage. So suppose the mortgage is say $600,000.
Okay,
So they should take a combined insurance covering their lives for 600,000. Now in this case, in this scenario, God forbid something happens to either of the party, the mortgage gets paid off.
okay. So basically, yeah, it's great, 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 great. That brings me to another question. Which is that you were telling us about a ballpark which somebody should keep. Now one thing which people always ask is that what kind of insurance amount should I put on the side, or any kind of insurance amount I should put a pocket on the side, in terms of my income, and maybe depending on your debt. So what's your advice on that, Anthony?
Yusuf, a ballpark figure is you should keep at least 5 to 6% of your annual income that you should plan to pay towards your covering your any of your debts, your mortgages. God forbid something happens to you, you want to leave X amount towards your mortgage, you want to leave for your children's education, you want to leave for your wife, you know, after the house is paid off, things happen, right?
Okay.
So at least 5%, 6%. I mean,
So another question for you, Anthony, is that what if a house is paid off? All right. Uh, Again, there's a house insurance which is there, but against a house, there's more borrowings which has happened in terms of people got a line of credit and they bought more properties on it. Again, creditors insurance is required for that as well, or what do you advise in that scenario?
Yusuf, you hit a very very sensitive point over there, and probably I know that you don't know about it. You said
Please
if the
tell us.
mortgage is paid off.
Yeah.
Yeah. If the mortgage is paid off, you open up to another can of worms in the world that we live in today, and
Mm.
that is identity fraud,
Yeah.
right? And for
Trust
that, you
finance.
need title insurance.
Yeah.
Title insurance is one insurance that always would be given by a lawyer. You don't have to go to any insurance broker for title insurance. Your lawyer will set you up for title insurance. So
Okay.
if your mortgage is paid up, you must have a very good title insurance policy in place. That's very
Okay.
important. Yes. And then uh, the other thing is, I mean, that just struck me when you said about the mortgage is paid off. When the mortgage is paid off, then you need a very good title insurance. And why would you? I always tell my clients, I said, why would you pay off your insurance? If you have, sorry, why would you pay off your mortgage? If your mortgage is there, say, is paid off, so take a line of credit against that. Say you
Yeah.
take 500,000, right? Don't
Yeah.
use that line of credit. Now the bank is looking after your title. They
Mm.
are the security people. They are guarding it because they know that they have paid 500,000 towards that house. You're not even paying anything for that. That is the easiest and the cheapest way to guard your house. So now
That's
the
true.
whole bank is,
Yeah.
have become your guardians. How good is that? Now, uh, now you as a broker would say, okay, my investor house is paid off. He's got a line of credit. You have a condominium coming up. You tell him to invest in the condominium, and he can earn $1,800 a month as rental. You're good at that, Yusuf. You have some properties like that, right?
Yes.
So where you guarantee people that they would get a guaranteed rent of 1,800 or $2,000,
Yeah.
which is a great, I think, so investment. So again, you now you have protected your client from title insurance expense. he's of course his house is paid up, but he's got a line of credit.
That's right.
Against that line of credit, he's got another home where he's making $1,800 now. If his house was paid off, he would not have made anything. He would
That's
have
true.
made zero, right?
That's true.
Now you as an uh, real estate agent have opened up the door for him to make an investment and give him $1,800 or $2,000 guaranteed income.
That's right. That's right. That's right. No, that's excellent. What else you think in terms of protecting? We talked about the investors, but for example, a first-time home buyer who's looking to buy a house, and most of the time they're not even aware of what kind of protection they should be looking at. And again, people who already has a house, we talked about it. Who's paid off their house, we talked about it. But somebody who's totally new and who probably might have not got a life insurance, nothing at all. What's your advice on that, Anthony? How do they go about in at least starting
So
up this?
So first time home buyers, they're probably younger people,
Yeah,
younger couples
that's
getting
right.
into the first time home buyers scheme. So it's always good for them. And they're the people who think nothing will happen to them.
That's right.
They will never get sick, they will live forever. So it's very important for them to at least get, at least minimum, get whatever the mortgage that they have taken, at least to cover the mortgage. So, so
Okay.
they can take a life insurance, take a term policy. That is the cheapest policy. A term policy is the cheapest policy to cover your debt. So
Mm,
whenever you're covering your debt, always go with a term policy. Don't go with what these life insurance brokers are telling you to get into those expensive permanent policies. You don't need to. That those are good policies.
right.
But here you're a first time home buyer. You only want to protect your mortgage. So go with a term policy
Perfect.
and
Great.
go with the longer term. 20, a term 20 is the cheapest. There's a term 10, there's a term 20, there's a term 30. The term 20 happens to be the cheapest policy.
And sometimes you can also get it changed as well, right? From your term policy to a permanent policy as well.
Yes, you can. Yes, that is interchangeable. That is not a problem. That's a very good thing. When you're younger, you go for a cheaper insurance, you get yourself protected, and then whenever your incomes have increased, then you start thinking of estate planning, and that's when you get into permanent insurance, because permanent insurance is expensive. Our whole goal should be to provide the best solution to your clients, to your investors. So we can do
Absolutely.
that. We
Absolutely.
can do that.
So we got one more question from Jeanette. Is there any insurance coverage for those who lost job and the EI payment does not cover their monthly mortgage? Very good question.
That's a very good question, Junaid. Again, so in Canada, there used to be one company that used to give lost job, and then people misused it. So
Okay.
they have also stopped now. So there is nothing for losing a job. There is no uh, coverage as such. If there is, again, I'll say there's some companies that do say that, but then they ask, the underwriting is very very tough on that. How did you lose your job? What happened? We do not cover this and that. So that's. But yes, disability is very clear.
Yeah.
It's
So basically, in case of a loss of a job, what you're saying is that whether your EI payment covers or not, there is no additional insurance to cover up your mortgage on that, right?
See, it can be covered under the debt insurance.
Okay.
So yeah, under the debt. So what the example that I said I gave you was $4,500 just to cover. So if you could take that insurance, that would cover you for some part of that commitment that you have.
Awesome, great. Thank you so much, Anthony. If there's any other questions, please do reach out to Anthony directly as well. Anthony at ableinsurance.ca. His phone
You
number
can
is
always
also
write.
there. You know, feel free to contact him for anything. Anything else, Anthony, you want to say?
I just want to say Keep yourself safe, and thank you very much, Yusuf. You're doing a great job. I think so. Your whole goal is, what I like about you is just to protect your people, your investors. Uh, you know, you have just their interest in mind, and that's a very nice thing. I can see that.
Thank you very much. Thank you very much for that, Anthony. As you said, with the Jawai IQI, we have always said in all our live shows that we are here just not to sell anything, but to look after the interest of our clients. Do contact us for any questions you have. We have some amazing, partners, business partners like Anthony and other people who can guide you, at least tell you what is right for you. And one thing which of any of our business partners, any of our agents, is that we will at least try to give you the best advice as we can on that. With this
The
note,
best.
everybody, please take care of yourself. Yes, you saying something?
As I said, just the best solutions will bring to the table.
Absolutely, we'll bring the best solutions, you guys. Thank you very much for joining. Thank you, Anthony, for the
Thank
evening talk. We always look forward for next month again with a new topic. Thank you so much. Everybody, take care of yourself. Bye bye.
thank you. Bye.